Gerard, great to get your thoughts. Your first take, please.
The first take, I think, from all the big banks, from the results that we've seen so far, is that the consumer businesses, J.P. Morgan's consumer business as well as Citigroup's, were very strong. I would also point out that these banks all did a very good job on focusing in on operating expenses. So they have levers to move when revenue growth is slower because of the net interest margin issues that they've identified. Now, in capital markets, as you pointed out, the Goldman number was very strong, especially in equity trading. And then you also saw at J.P. Morgan, their ECM number was very strong. So it's not as smooth as we've seen in the past, but overall the numbers, in our view, except for that margin compression, are good for most of these banks.
Gerard, net interest outlook, the net interest income outlook, really not pretty. It's not that dramatic. J.P. Morgan is down 0.5% in early trading, but you and I have had the conversation before about what low rates mean for these banks this time around and whether there are any parallels to the mid-1990s. Are you still convinced of that?
Yeah, we are. And in fact, I thought it was interesting on the J.P. Morgan call, they identified that they are expecting 3 rate cuts this year. And I think what we're going to see is that the deposits that have already reached their maximum betas, that's the amount of the Fed funds rate increase that the depositor receives, well, those betas are going to work in the reverse for the institutional money and the high net worth money. So I think we could be pleasantly surprised that if the yield curve steepens, look at the 10-year today, on the strength of the retail numbers, we get a steeper yield curve, you get deposit rates coming down in certain markets, and the margin compression may not be as bad as people think later this year.
Gerard, where does the volume, the loan growth come from? Where does the revenue growth come from?
We're seeing the revenue growth on the consumer side, no doubt about it. Credit cards, auto, other types of consumer borrowings, that's where we're seeing the best revenue growth so far. But remember, these are gigantic companies, and they generally grow at the nominal rate of GDP. So if you think nominal GDP, real plus inflation, is around 4 to 5%, that's the top-line revenue growth that we're going to see from these very big banks.